Hey team, welcome to another full analysis video. For this video, we have decided to analyze SkyCity Entertainment Group, where we will take you through the history and the background of the company, how they operate, their financial health, how the pandemic is affecting them in terms of revenue. We'll share with you a list of reasons why you should buy the stock or sell it. And lastly, we'll share with you if we have any stake in SkyCity Entertainment. With any analysis we do, we roughly spend about 6 to 7 hours digging into the company and pulling out all the information that's relevant for you to make the best possible decision when it comes to buying or selling the company in question. If this video is helpful to you, please do hit the thumbs up button, and if you're new to our channel, do hit the subscribe button for the latest analysis on very popular companies in the stock market. Let's get right into it. So from our previous analysis, you can tell we like looking into the history of a company. We do this because we believe there are treasures hidden in the past that could tell us a lot about how a company may do in the future. This can range from key turning points that reshaped the company to how the company has dealt with external forces that impacted their business. Also, it's always good to know what you're investing in completely. This is why we like starting with the history. SkyCity was listed on the New Zealand Exchange in February 1996. A few years later, SkyCity acquired the Adelaide Casino in June of the year 2000, as well as opening its Queenstown Casino late in December of the same year. In 2002, Hamilton SkyCity opens up. In 2004, SkyCity buys MGM Grand Darwin, which they sold later on in 2018 for a profit of $44 million. Now, these are some of the basic key points in their history. Now coming to their full portfolio on what they own. They own 5 casinos in Hamilton, Auckland, Queenstown, Adelaide, and they also run an online casino. They also own a 40% stake in Christchurch casinos. Moving to the hospitality and tourism side. They own and operate 22 restaurants, 16 bars, 4 hotels, 6,000 square meters of conference space, 2.2k parking spots, and New Zealand's tallest building, the Sky Tower, which attracts 500,000 visitors a year.
Now that we look at the company history and its portfolio, we need to understand how the company operates and functions to generate its revenue and other fundamentals. So from the history section, we know that they engage in many different operations, but 80% of their revenue is from gaming, which means they are heavily reliant on their casinos. However, in their last annual report, they have stated that there are unlikely to be many new land-based casino license opportunities. This means that their future growth will have to come from other lines of businesses. Unfortunately, their restaurants are low margin and exist primarily to service their gaming and hotel customers. On the other hand, their hotels have higher margins and are looking to expand on this opportunity. Their plans for this are already in place. One of their current projects is the Adelaide Casino and Hotel expansion, which is expected to open towards the end of 2020. This is a large project with SkyCity investing $330 million, which aims to transform the Adelaide Casino into a world-class integrated entertainment hub. Additionally, in New Zealand, they own undeveloped freehold land in Hamilton, adjacent to their casino, which could accommodate a hotel. They have also acquired a hectare of lakefront land in Queenstown for a 5-star hotel. However, because of the large debt they have committed to the Adelaide project and the Auckland Convention Centre project, which caught on fire at the end of 2019, they do not have any significant debt capacity left for other expansionary projects or initiatives in the short term. So the Hamilton and Queenstown expansion won't be anytime soon. As well as physical, they are trying to expand digitally. SkyCity is currently expanding online. Last year, they launched an offshore online casino via a Maltese subsidiary. Now that we know their strategy, let's have a look at the company through their financial statements. If we look at their income statements of the last few years, we can see that their revenue isn't growing and their profit is mostly steady around 150 million. So SkyCity is not a growth stock, and we shouldn't be going to this stock expecting 5 times return anytime soon, if ever. But this does not mean SkyCity is always a bad buy. It also depends on what you want from the stock. If you are purchasing a stock because you want a steady dividend income, SkyCity may potentially be for you. They have a consistent dividend record of 20 cents per share, which is a quite high percentage yield for a $2.50 stock. But since SkyCity is more of a dividend stock, we need to check if their payout is sustainable. The 20 cents per share adds up to $130 million in dividends each year, which has to come from their profits. This means they have been pouring 80% of their profits in dividends. Since they are paying out less than they earn, it is sustainable as long as the business is consistent. But this only leaves a very small room for growth and backup cash for future emergencies. And if we look at their balance sheet, we can see that they have a quite high level of debt, and their current asset is only 62% of their current liability. And although they have recently sold their Darwin casino and concessions to their car parks, totaling $400 million last year, with the COVID situation around, it is hard for us to tell whether their balance sheet is strong enough or not. We will have to wait for the next financial report to find out.
Now that we've looked at their past performance, let's see how COVID-19 has affected their business. SkyCity released a statement outlining how the COVID situation has affected their business in the month of March. For Auckland, visitation to the precinct was down around 15%. Electronic gaming machine revenue was down 14%. Domestic table and automated table game revenue was down 43%. Hotel revenue was down 19% with average occupancy of 79%. Food, beverage, and convention revenue was down 32%. Sky Tower revenue was down 35%. For Hamilton, no impact to the gaming revenue. Non-gaming revenue was down 12%. For Queenstown, combined revenue was 37%. For Adelaide, gaming revenue was down 7% and non-gaming revenue was down 14%. Having said this, SkyCity fortunately launched their online casino mid-2019, so it was a perfect time for them to shine during lockdown. SkyCity mentioned that their online offering has been trading strongly over the past 2 months. It has now more than 15,000 registered users on the site. But how effective was this? A recent survey of 1,000 people conducted by the Health Promotion Agency highlights that most respondents say that they were gambling less or the same amount as they usually would during lockdown. They say this was due to financial reasons. 9% of respondents said that they increased their gambling during lockdown, and 8% said they gambled for the first time. So looking at the overview of the situation, numbers were still down quite a bit during March, when restrictions were not so tough. Only towards the end of March, full lockdown took place. So it is likely that the numbers for the month of April and May will be hugely on the negative side. The silver lining for SkyCity was the app and the capability to gamble online. However, based on the survey results, it is not likely that the app was a huge jackpot. And we know that a survey of 1,000 people does not represent the whole population, but it is certainly enough to see where the direction of the gambling scene is going, as most of the people responded to a reduction in gambling due to financial uncertainty because of COVID-19 and its economic impacts. So now that we've looked at SkyCity's history, how they operate and generate revenue, as well as their past performance and how the COVID-19 situation is affecting their business, let's take a look at all the reasons you should buy the stock or sell it. Let's start with all the reasons you should buy the stock. Reason number 1, SkyCity has a consistent record for profit and dividends. Reason number 2, if SkyCity recovers back to normal in the future, the dividend yield from the $2.50 buy will be 8%. Reason number 3, they already have plans for expansion in high margin areas such as hotels. Reason number 4, lockdown has been lifted and they can start generating revenue again after being fully closed for 2 months. Reason number 5, the $400 million from the Darwin casino and the car park concession sale will have helped strengthen their balance sheet. Reason number 6, additionally, SkyCity has cut a lot of staff, which is their most single largest expense.
Now the reasons you should sell. Reason number 1, they have a lot of short-term liability that is not covered by their short-term assets. Reason number 2, COVID figures in March were down quite a bit even though the country wasn't in a full lockdown. Reason number 3, COVID will negatively impact the expansion of hotels due to international travel restrictions. Reason number 4, due to international travel restrictions, their tourism and potentially a good portion of their gaming revenue will be cut. Reason number 5, there is a big uncertainty about the SkyCity Convention Center and when it will be completed because of the fire that was caused at the end of 2019. Reason number 6, the room for expansion in the gaming side of the business is limited due to the government restrictions of further gaming licenses.
So these were our reasons for why you should buy the stock or sell it. Now for the question that some of you might be thinking, do we have a stake in SkyCity? Well, we do, and we plan on holding it at least till the next financial report release. Now, that was our full analysis on the SkyCity Entertainment Group. leave a comment in the comment sections on what companies you would like to see us do a full analysis on. And as always, if you haven't smashed that like button, make sure to do so and hit that subscribe button too, especially if you're new to our channel, to keep updated on the most popular stocks in the stock market.
And thanks for watching. See you in the next video.